Hey guys, welcome back to High Yield Intraday Trading. I hope every one of you is doing good. So before we start discussing today's topic, let me request you all to subscribe to my YouTube channel by clicking on the subscribe button here. Once you click on it, you will get the confirmation on the left bottom corner. Post you subscribe to my channel, also make sure to press the bell icon and click on all. You will get the confirmation on the left bottom corner so that whenever I upload a video, you get the notification about the same without any misses. Also, I would request you all to subscribe to my Telegram channel with the name HYIT Intraday Calls because I share a lot of things over there and it might be helpful to you in some way or the other. All right. So when it comes to intraday trading, we get to hear many things that are actually helpful if implemented as instructed. Like, for example, we hear that we should not take up a trade if a particular scrip is continuously making new highs or continuously making new lows, which in turn means that the stock price is continuously rising or falling. Right? Rather, the right thing that should be done in such cases is that we should allow the stock to go up and then wait for it to retrace, and post that when it comes or when it gets a support at particular level, we should make our long entry. But when we talk about the retracement, the thing that we miss to mention, or I would say the most important thing that a trader should know, is that how much will it retrace? Till what point will it or can it retrace? So in this video, this is the exact thing that we are going to discuss, and I hope that this will give you some more deeper idea of how things should be handled when you are day trading, especially when you get to see a crazy up move or when you get to see a crazy down move. Okay, so let's say that you are following a 15 minutes time frame and a particular stock is continuously going up. The market started at 9:15 a.m. and this guy is rapidly going up till maybe 10 o'clock or 10:15 a.m. And let's assume that you are a disciplined trader and your mentor has told you not to make a long entry in such stocks. So now you are waiting for this rapid up move to stop and then for it to retrace down a bit, so that when it takes a support at a particular point and starts moving up again, you can initiate a long trade. But as I said earlier, just the word retracement is not enough. What you need to know here exactly is till what point will the stock price retrace, right? So the first thing that I would like to mention here is that there is no solid number that you can use to measure this particular retracement. We cannot define a retracement percentage, and this is a fact which no one can deny. Okay, you see, day trading is all about these kind of hard facts, and you or we as a trader cannot and should not really get disappointed by listening to such things. Rather, we need to find an alternative way which works most of the time. That is what real traders do. Okay, so talking about the retracement percentage, let me go ahead and put my perspective on this, okay, as to how I see these things and how I measure the retracements. So when it comes to me, in order to anticipate the retracement percentage, I consider the kind of a move that the stock is giving. And when I say kind of move, I have defined two type of moves here. First is a small move and second is a big move. Okay, let me take you to the charts here, wherein I have already not the chart. I'm really sorry. Let me take you to a pic here, which I've already prepared. Okay, so the left hand side chart that you see is something that I call a small move. Okay, and I mean, these green candles, I have named them as small moves. Okay, and on the right hand side you see the chart where we have some really big and long green candles. So this I have named as big move. Okay, so small moves are the ones wherein the 15 minutes candlesticks that are formed are not big candles. They should be small ones or maybe medium ones. Okay, and these are the kind of moves that are normally seen every now and then. So I feel there is no need to have them discussed in this particular video. But the kind of the moves that are more rarer and riskier are the big moves, the one that you see on the right hand side. Okay, this one. And big moves are the ones wherein the candlestick is a really long one. And mostly traders get confused with such big candlestick formations. So we will take a look on them. Okay, specifically on the big moves. Okay, so the first thing first, so the first thing that you need to do is you need to differentiate or identify as to whether the up move that is happening, whether it is a small move or whether it is a big move. Now, I'm quite sure anybody can do it. Okay, if you see, let's say for example, if the stock is going up, okay, and if it is forming some green candles which are small in size or medium like this, some medium sized candles, then you can very well say that okay, this is quite normal to be happening. Okay, just by seeing the candlesticks, anybody can say that. Similarly, on the right hand side chart, just by seeing the candlesticks, anybody can tell that this is something abnormal. This is something which we don't get to see every day, so this is something special. Okay, so these are the big moves, and this is exactly on which we are going to concentrate on this video. Okay, now once you have identified that, now it's time for you to anticipate things. And the way you anticipate is like this. Okay, when we talk about big moves, okay, when we talk about big moves, the chart that you see on the right hand side, those kind of situations have to be handled differently and very carefully. So for the big moves, the first thing that you need to do is to wait for that candlestick to close. Okay, it might be this candlestick or it might be this candlestick, right? So each candle represents a 15 minutes time frame here, right? So each candle is formed only after 15 minutes is over. Okay, so if you talk about this candlestick, if the candlestick is starting at 11 a.m., this complete candlestick will be formed at 11:15. Okay, similarly this candlestick, if the candlestick is starting at 11:30, then the candlestick will get completed at 11:45. So 15 minutes. It is the very basic. I don't have to get into that. Okay, I hope you're clear on that. Okay, so we need to wait for the candlestick to close. Now this is the very basic of trading, and we all know it for the matter of fact that most of the traders fail to wait for a particular candlestick to close. Okay, may it be a 5 minutes time frame or may it be a 15 minutes time frame. The fact is we lose our patience to wait for those mere couple of minutes, and that is where everything starts going wrong. Okay, now for this video, let's assume that we have waited for 15 minutes for the 15 minutes candlestick to close, and then this is what I do. Okay, listen to this very carefully. I normally take the help of Fibonacci retracement to see till what point the price can retrace back to. And if you are not sure about the Fibonacci retracement, I would request you to take out some time and search for that particular topic in my YouTube channel, and you will understand how to use Fibonacci retracement, and then you can continue with this particular video. Okay, so make use of it as it works most of the time, and it will help you to define a particular support level. Okay, so let's move on to the chart now. Okay, so now you're clear, right? We are talking about these kind of crazy up moves. And when we see these crazy up moves, the first thing that I suggest you to do is wait for the candlestick to close. And once the candlestick is closed, that is when you bring in Fibonacci retracement. That will tell you till what point can the stock price retrace back to, and then it might go up further. Okay, So having that said, let's get on to the chart. Okay, so this is work hard pharma, a 15 minutes time frame. As you can see on the left top corner, it is the 15 minutes time frame, and the chart is for work hard pharma, and the date was for is for yesterday, that is 16th of July 2021. Okay, so let me take this off first. Okay, just a moment. Okay, so let's talk about the first candle of the day, 9:15, right? That is the candle. It is a quite normal candle. Okay. Now, if you talk about price action, it clearly tells you that Workhard Pharma is in a mood to go up further, because the sellers tried to push the stock prices down, but the buyers were not ready to accept that particular price at such a low level. So what the buyers did was they pushed the stock level again in the upward direction. Okay, so it gave a beautiful bullish pin bar. Again, what is bullish pin bar? Please take the help of YouTube, or please take the help of Google. Okay, now, the main thing to mark here is, just by getting a beautiful bullish spin bar in the first 15 minutes, you cannot define the complete day. You cannot decide that, okay, since I have got a bullish spin bar as the first candle of the day, the rest of the day, Wokhar Pharma is going to shoot up. Nobody can say that. Nobody at all can say that. Okay, so we don't get any we cannot reach any summary by seeing the first candle of the day. We need to wait for the stock to move, to retrace, and then we decide. Okay, many factors come into picture as and when the time goes by. That is why I always suggest you to start trading only after 9:45, or maybe 10 o'clock, or maybe even 10:15. Okay, don't trade before those times, because if we start trading at around 10:30 or 10:15, we get a ample amount of time to decide what is going on exactly in the market. Okay, if a particular script wants to go up, it will go up, and then it will start retracing down. And by analyzing the technicals, you can very well say that, okay, it has all the chances to breach the day's high and go up further. So you take the buy position at the retracement levels. Okay, so all those things have already been covered in many of my videos. I would say I cover it in all of my videos. So again, those are known stuffs. The only thing that you need to do is to agree and obey to what the charts say. Okay, now getting back to this particular topic, so we are done with the 9:15 candle, and we see a beautiful bullish pin bar, but we are not ready to take a buy position because it is very early in the morning. Okay, now the next move is a crazy up move. It is a completely solid green candle without any wicks at all. Okay, so that tells you that again, Wokhard Pharma is in a strong uptrend. But the question is, we need to wait for this particular 9:30 candle to close. Only after the 9:30 candle closes, we can see that it is a solid green candle, and work pharma is in a complete mood to go up further. Okay, now I would take this as a crazy move, right? Because if you talk about the low of the candle, it is like, let's round it up to 541, and the high of the candle is around 560. Okay, a 500 rupees scrip giving you a 19 to 20 rupees move in 15 minutes is a crazy move for sure. We don't see this happening every day in the stock market, every day in many of the stocks. Okay, so now you have identified that this particular move is a big move, that is right inside short. Okay, so right now you are done with the first thing. You have identified that, okay, work hard pharma has given a big move on the chart. The next thing that you need to do is let the next candle start, and then you bring in the Fibonacci retracement. Okay, now how do you draw the Fibonacci retracement? You draw the Fibonacci retracement from the day's low to the recent day's high. So when this candle closes, this will be the recent day's high, not this one, right? Because this candle, the 9:45 candle, is still on the go. Okay, but the 9:30 candle has completed. So the high of that candle will be the recent day's high. Okay, so you bring in Fibonacci retracement right from the day's low and you extend it to the day's high. Okay, and this gives you the retracement levels you see here, right? So what do you know by these numbers? You see these numbers, right? 50% retracement, 61.8% retracement, 78.6% retracement. So these are the retracement levels, which tells you that work pharma can fall down till 50% and then start moving up. Or work pharma can fall down till 61.8% and then it might move up again. Or work pharma can fall till 78.6% and then it can start moving up again. So these are the retracement percentages that are defined by the Fibonacci retracement. I hope you're clear here. Okay. Now, let me also mention here that on this chart, you see this as a perfect example, right? It exactly came down till 50%. It was not able to breach this 50% mark and go down. Rather, it just touched the 50% mark here at 10 o'clock and also at 10:30, and then it started moving up. So this is a perfect chart setup. Okay, but please remember that in live market, when the stock is on the go and when you draw the Fibonacci retracement, not all the time the charts will give you such perfect drawings, okay, such perfect scenarios. So be aware about that. Okay, so these 50% mark, let's talk about only 50%. Okay, so this 50% mark can also be placed somewhere here, right? Or it can also be placed somewhere here. The thing is, it should approach 50% mark. It is not mandatory for the scrip price to touch the 50% mark and then go up. What you need to mark here is, when we talk about support, it should come closer to the support levels. That is what, or that is how you should read the technicals here. I hope that is clear. Okay, so from the Fibonacci retracement, you came to know that, okay, it might come down till 50% and then it can take a support at the 50% retracement level and then it can shoot up further. The same thing happens here as well. Okay, so uh, one more point I'm forgetting here. Yeah, now since we are talking about intraday trading, okay, there is another very important level that does not come onto the chart when you draw the Fibonacci retracement. Okay, and that level is the 38.2% retracement level. Okay, you need to check this box. Now I'm using TradingView. Guys who are using TradingView, this is how you amend the settings. And if you are onto some other trading terminal, then you should be knowing how to do it. Okay, so this by default will be unchecked. Okay, so the first retracement level that you see, that you will see, is always 50%, but please make sure to bring in the 38.2 percentage retracement level as well. Okay, because we are into intraday trading. Okay, so this gap has to be filled. Okay, 0% to 50% is too much for intraday trading. Okay, so 38.2% is another retracement level that acts beautifully. Okay, so I would request you all to bring in the 38.2%, just by the way I just showed you. Okay, now as you can see here, the retracements was very well till 38.2%. So basically it was hovering between 38.2% and 50%. Okay, so you can take the space between 38.2% and 50% as the support zone. Okay, so you know that the space between 38.2 and 50% is a strong support zone. So what you need to do next, you need to wait for a green candle which breaches the 38.2% and closes above it. So in this example, which candle actually did that job? The 11:15 candle did that job. Okay, so you need to wait till 11:15 candle gets closed, that is till 11:30, and your long entry should be initiated at any price in the 11:30 candle, right? So this is the 11:15 candle. You have to wait for it to close, because only after the closure of that candle you will be sure that okay, the resistance that is at 38.2% has been breached and it has closed above it, and this level is working as a very good support. So your long entry or your buy entry will be at the 11:30 candle at any price. Normally I use the market order. So let's say, for example, in worst case scenario, if your entry was taken up at 553 maybe, right? Let's say your entry was executed, your buy order was executed at 553. So what would be your target? If you remember, in these scenarios, I always suggest a target to be the day's high or just below the day's high. So if your entry is at 553 and we are trading a 500 rupees scrip, so my expectation is to get a target of at least 5 rupees. So 553 plus 5 is 558, right? So the day's high is at around 559.75, right? Or to be exact, it is at 561.25. You can see here, right? So the day's high is 561.25, but I don't care. My target is to get 5 rupees. Okay, so I will be a happy trader if I'm getting a profit of 4 to 5 rupees when I'm trading a 500 rupees scrip. So my entry was initiated at 553 and I booked my profits at 558 here, somewhere here. A very, very safe and beautiful trade. Okay, and then I don't care if it breaches the day's high and goes up even higher, because I am done with my job. I did the right technical analysis. I took the right entry. I put the right stop loss. I booked out my profits at the right time, and that is what a trader should be doing. And that is exactly what we did it in this particular chart. Okay, so I hope you are clear here, guys. Okay, and just give me some time here. Let me see if I'm missing something. Let me just recollect real quick. Mm, no. Yeah, so that's fine. Whatever I have explained is more than enough for you to understand how to handle crazy up moves. Okay, so similarly, the same thing you should be applying when you see a really big move in the downward direction. Okay, wait for that particular falling candle to close and then draw a Fibonacci retracement, and then you get the right resistance levels. Okay, so I hope you all got the point, guys. Okay, and please remember that when it comes to trading, there is nothing called as sure shot. Okay, there is nothing called as sure shot. Nothing, absolutely nothing can be sure shot in trading. So the best that can be done by us as a trader is that we can, I'm really sorry, just me disconnect the call here, just a moment. I'm really sorry about that, guys. So the best that we can do as a trader is that we can anticipate things based on the technicals. Okay, and that is exactly what I do in order to trade intraday. All right, and just one more point to add here, guys. So when we talk about these kind of crazy up moves or down moves, I just explained how to anticipate the support points using the Fibonacci retracement. Okay, normally another thing that can also be taken into consideration is when we see such up moves. Okay, and if the stock is really in a mood to go up, what has been seen most of the time is that it will come down till at least maybe till halfway. Okay, so from here to here, the halfway will be somewhere here. at this point, right? So as you can see here on the chart, it did come till halfway and then it shooted up. Okay, so it has been seen in many of the crazy up moves or many of the crazy down moves that happen in the market. Okay, most of the time it will go up and it will come till the midpoint of the movement and then it will push itself in the upward direction again. But again, the thing to remember here is that is just theoretical. Okay, I just told you that so that you people know about it. Okay, what happens most of the time. But when it comes to technical analysis, this is the thing that we use. The Fibonacci retracement is the thing that you should be using in order to be sure as to till what point a particular stock price can retrace back to. Okay, so yeah, so that's it from my end, guys. And for the guys who have not watched my previous video, I have put in the video card on the top right corner of this video, the eye symbol that you see there. You can click on it and watch my previous video. And as always, we request you all to like and subscribe to my YouTube channel. And also, please do not miss the ending of this video, as you might get some more information about HYIT that might be helpful to you in some way or the other. And please feel free to ask your questions or queries, if any, in the comment section, and I will surely reply back to them. And also, please do not forget to like this video if you liked it. So that's all from my end, and I will see you all later. Hope you all will stick back. Happy trading and take care of yourselves. Bye bye.